Hello everybody, this is Breaking the Mould. I'm Clara Hermit, and with me today I have our Investment Research Director, Russ. Now Russ is going to be telling us all about the fuss, and of course there's been a lot of fuss made about the sunshine and the weather, but I know you have got other fusses on your mind.
Well, we've got the budget on Wednesday, the 19th, and Chancellor of the Exchequer George Osborne will be looking to spread a little bit of sunshine of his own. He's only got 2 more before the general election, so he needs to get a wiggle on if he wants to get re-elected. But actually the real fuss of the next fortnight might be about something he announced a year ago, namely the removal of the 0.5% stamp duty that's charged on AIM company share dealing. Now, that might not sound a lot, but it's a frictional cost, it all adds up. And add that to the fact that in the summer, he allowed AIM companies to be put in people's individual savings accounts or ISAs. There might be a lot of you out there thinking of giving AIM another look.
And what should investors bear in mind to make sure that their AIM picks are bang on target?
Very good. I bet you've got loads of those tucked away, haven't you? I mean, it's exactly the same as if it's for the main market, the FTSE 100, the FTSE 250 companies. Same 4 things to think about. Does it fit with my investment strategy? Does it fit with my target long-term return? Does it fit with my time horizon? And most importantly, does it fit with my appetite for risk? And think of that in terms of how unhappy you'd be if you lose some money. It is the most important thing to consider. Now, most AIM companies are valued at less than £500 million compared to over £3 billion on the FTSE 100. There are exceptions, online fashion company ASOS, insurance software player Quindel, but most of them are pretty small. Lots still make a profit and pay dividends, but a lot more don't. Quite a lot of AIM companies very early in their development, loss-making, some don't even have sales. So what you're looking for here in terms of being an investor is you've got to be prepared to take risk, because some of these might not work out as planned. You're going to be looking for growth, capital appreciation, not patient dividend accumulation and portfolio building.
Okay, so they may not be suitable for everybody, but what AIM names are capable of hitting the bullseye?
Very good. Now, there are 3 great examples of what AIM's all about reporting numbers in the next fortnight. The first one is Regenesis on Monday the 17th. It's a mobile phone set-top box re-commerce play. That means they repair and refurbish them basically when they're broken. And they provide insurance, warranty care services. Growing like a rocket, shares have doubled in the last 12 months, exactly what AIM's all about, and it's making a profit. So you've got interim numbers coming up. Just to give you a steer for the full year to June, the market's looking for 78% profits growth to 10 million quid and for a dividend. So it's a classic example of what can go right on AIM. Let's see what the interims bring.
Okay, so that's the first of 3 names. What's the second?
Second one will be Outsourcery, looking to wave its magic wand on budget day, actually, the 19th. The co-CEO is Piers Linney, who's on BBC Dragon's Den, interestingly enough. But it's a fascinating company. It's all about hosting telecoms and IT services in the cloud, on the internet, on their O-Cloud platform, which allows companies to run their services in a much more cost-efficient way. Very clever, very cost-effective for companies, and again, with a bit of a superstar on the board, it's quite interesting to see how it's going to work out.
Yeah, I was going to say, we'll all have to tune into that when it's on, won't we? So what is the final and third AIM company?
Okay, this is Service Power Technologies. Now, Service Power is about break-even, Outsourcer is in loss, Regenesis is making a big profit. So again, it's a really interesting combination of the 3. All 3 are growing quickly. Service Power has already flagged that its sales are growing by around 25% in the year that's just ended. It does have bit of a dodgy reputation because it's historically disappointed. Again, that makes some people think of AIM very typically, but there's a new management team in place, contracts are piling up, and if they can start to build on this momentum from break even to a profit, again, could become a classic AIM play. They've got numbers on Wednesday the 26th.
Okay, thank you.
Pleasure.
So hopefully your AIM is going to be bang on target. We'll be back with you in 2 weeks' time, but until then, take care and goodbye.